The US Treasury just sanctioned a crypto exchange directly, seized nearly $1 billion in Iranian crypto, and called it the single greatest financial offensive ever marshaled against an adversary. Iran responded by threatening to threat any country that helps as an act of war. And somewhere in the middle of all of this, Bitcoin barely flinched. Let's break down exactly what's happening and why crypto specifically got put directly into it. So, what is Economic D-Day actually? Well, one correction before we start. This isn't a tariff, it's a sanction campaign, and that distinction matters because sanctions and tariffs work completely differently. A tariff is a tax on imported goods. This is something else entirely, a coordinated effort to cut off a country off from the global financial system. On August 19, 2026, Trump posted on Truth Social that oil smuggling, swap lines, cash transfers, exchange houses, ship registry, fraud companies, it all need to stop now, warning that any country allowing its banks, businesses, or government entities to give Iran a financial lifeline would face tremendous economic consequences. He called it an Economic D-Day. On Monday, August 24, Treasury Secretary Scott Bessent formalized it, unveiling a sweeping sanction package he described as the single greatest financial offensive ever marshaled against an adversary, writing at dawn begins an Economic D-Day, and explicitly stating that the goal was to collapse this regime. The package hits Iran's banking, energy, aviation, shipping, and gold sectors with secondary sanctions, meaning foreign companies anywhere in the world that keep doing businesses with Iran risk getting locked out of the US markets themselves. This builds directly on an earlier already existing sanctions efforts called Operation Economic Fury, which had already targeted Iran's banking, energy, aviation, and cryptocurrency sectors, and had begun freezing Iranian crypto assets before these latest escalations. So, Iran's response is that Iran didn't back down. It escalated right back. Iranian Foreign Minister Abbas Araghchi dismissed the campaign as a diversion from America's own crisis, unprecedented debt, and surging interest costs, posting that doubling down on failed policy will only bring further defeat. More seriously, Iran's state-controlled Persian Gulf Strait Authority warned that vessels violating its transit rules in the Strait of Hormuz could face fines, seizures, or confiscation. Iran went further still, warning that any country that becomes a partner in creating economic restrictions against it would be treated as an enemy, and separately threatened that backing the new sanctions could be treated as an act of war outright, with explicit warnings that not a single drop of oil would leave the Strait of Hormuz or the Persian Gulf if the pressure campaign continued. Now that's a genuinely significant escalation risk because the Strait of Hormuz is one of the world's most critical oil transit choke points. A real disruption there doesn't stay contained to Iran's economy, it ripples through the global energy markets and from there into every risk asset, crypto included. So why is Bitcoin directly affected? Here's the part that makes this different from a typical geopolitical shock story. Crypto wasn't just an indirect casualty of broader market fear this time. It was a named direct target of the sanction package itself. Monday's measures specifically included sanctions on Nobitex, Iran's largest cryptocurrency exchange, which the Treasury described as a key player in the sanction evasion, terrorist financing, and transaction linked to the Iran's Islamic Revolutionary Guard Corps. The package also names specific digital asset wallet addresses, including one tied to an individual the Treasury said had gained control of a wallet that held over $30,000 worth of Bitcoin back in 2023. Treasury Secretary Bessent stated that the US has now seized almost $1 billion in Iranian crypto as of this campaign. As for the broader market reaction, Bitcoin has actually held up remarkably well through all of this, trading around 77 to 77,150 even after the formal sanction announcement occurred. Notably, not crashing the way it did during the tariff-driven liquidation event we covered in an earlier video. Part of that resilience comes down to timing. Bitcoin had already surged more than 20% the prior week on unrelated catalysts, including the Treasury's own debt buyback program and a weakening dollar, giving it a real momentum heading into this news rather than catching it in a vulnerable, already declining state. Gold, meanwhile, extended its own gain past $4,645 an ounce as traditional safe haven demands rose alongside the geopolitical tension, with some analysts noting more blockchain native investors turning specifically to tokenized gold products as a way to express that same safe haven trade on-chain. So from here, the story is actually still actively unfolding, and there are a few distinct paths worth watching. If Iran's Strait of Hormuz threats translate into actual disruption of oil transit, again, that's the scenario most likely to hit crypto and the broader risk asset hard. A genuine supply shock to global energy markets tends to trigger the kind of macro fear that pulls capital out of volatile assets fast, similar in mechanism to what we covered in our tariff liquidation video as well, just with oil markets as the transmission channel instead of a direct tariff announcements. So if the situation instead stays at the level of financial sanctions and rhetorical escalations without a physical disruption to shipping or energy supply, Bitcoin's relatively calm so far suggests that the market may continue treating this as a manageable price-in geopolitical risk rather than an acute crisis, especially with prediction markets as of the most recent data showing 68% odds of Bitcoin reaching $85,000 by the end of 2026, suggesting traders currently lean towards this staying contained rather than spiraling out of control. Worth also watching directly is whether Treasury continues expanding direct crypto-specific sanctions beyond Nobitex and the wallets already named, since that's the piece of this story most likely to be specifically affecting crypto infrastructure and exchange beyond the broad market sentiment. So in conclusion, this is a genuinely unusual case for this channel to cover, a major geopolitical sanction campaign that named a crypto exchange and specific wallet directly, rather than crypto just getting caught in a broader market reaction to unrelated news like we used to cover. So far, Bitcoin's response has been resilience rather than panic. But with Iran actively threatening the Strait of Hormuz and describing potential retaliation as an act of war, this is exactly the kind of story that can shift fast in either direction with very little warning. So if you want to see how a similar geopolitical shock played out differently earlier this year, check out our video on the Greenland tariff liquidation event, on our breakdown of this month's short squeeze rally for the macro backdrop this news landed on top of. So guys, stay safe, stay curious, and I'll see you guys next time.